So what we're going to talk about is how I navigate session highs and session lows. And we kind of talked about it a little bit before I started, right? When we create these session highs and these session lows, these are on the higher time frame, and I've explained this a couple times. These are our big pivot points in the market structure, right? This is where the market is going to create its point of interest, its POIs, or what I like to call them as inducement levels, right? We all know them as liquidity. Um, we sometimes call them support and resistance. We call them the top of an order block, the top of a breaker block, whatever you want to call it. But all of these highs and these lows are eye candy for breakout traders. So part of being an ICT trader is, if you guys know what fading the trader is, right? Like, so we'll just say, for example, I say to go long and you go short and you're right. That's what an ICT trader is. It's fading, what they call trading against retail, like retail concepts, right? And one of the retail concepts is a breakout trader. So we have London here, and this is just a good example, right? So we're going to use this. We have London here, and we broke out of London. So everybody who thought we were going to break out of London and go higher, we got stopped out, right? Got stopped out, and then we went completely the opposite way, right? And then the same thing goes for the lows, right? Like here's a low here, here's a low here. Like we literally dropped beneath the low. So anybody who had their limit order here, and we're just gonna say, just for just humor me here, we're gonna say that you place your order and you turn your chart off, right? I placed my long here and I closed my chart and I went about my day. Well, it limited me in and then it stopped me out, right? Limited, stopped me out. It's different than people who market in, but it's still the same, right? When we break out, you market in and then the market goes against you, right? And accumulates your stop real quick. A lot of people think we're going to break out of here and we're going to attack whatever highs, support and resistance, or supply and demand that's over there, because that's the biggest retail concepts. According to ICT, it's a supply and demand and patterns, supply and demand, and support and resistance. So if you break out here, we're attacking the next level. And we saw yesterday, right, the next level was actually pretty high. So there's a really big chunk of change you can make here, a really, big bankroll. If we broke out correctly, like we did here with Asia, right? If we broke out correctly and went higher. The challenge with breaking a high is you get, we talked about this, is you get one-sided. When I take London, I want to see us continue higher. And then every small retracement that we get higher, it kind of fills us with that dopamine or that, euphoria that it's going to go higher, but then we just drop lower. And then every little time it goes lower, we think it's going to break out, but it actually goes lower until finally we lose all of our money and we're broke. We got to turn to Robin Hood. And when you trade back into the range, right? When we anticipate, and I'm just showing you guys just these two because they're really good chart examples. And when we anticipate a reversal, right? Like we talked about, we break out and we're like, oh man, time to go short. And then we go short, and guess what? It comes back up to our entry where we try to go short again, comes back up where we think this is the new false breakout, and then it stops us out again. So the challenge that I had was, which one is actually going to break out and continue higher, and which one is actually going to be a false breakout, right? How do I identify if the session high or the session low is going to be taken, swept, and reversed, or it's going to be grabbed, consolidate on top of it, right? Like over it, and then leap off of it and continue the trend. So how do we anticipate that Asia is going to get traded above, break a structure, and then trade on top of it and go higher, right? How do we anticipate that London, when London creates its high, how do you anticipate that London is actually going to get swept or get taken out, and then we're going to reverse? That's what this model is, and it's pretty cool, pretty straightforward model. You just have to look for session highs and session lows, and you have to map out in two different time frames depending on the range. You just have to map out the last up close on an uptrend and the last down close on a downtrend. So if we have an uptrend and this is Asia high right here, right? And we start trading lower, we look for the up close candle before we traded away from creating that high, right? So like for example, if we look at London here, we have what? We have our trend, right? Then we have our high that was created, and then we traded away from it. This is what we want to look for. This is what we want to see, and what we want to use as our compass, as our navigation, right? So what we'll do is, my bad, I went off. What we do is we find that last up close candle. So if we use London as an example, here's that last up close. And really, depending on the candle body's range. So like if you look at this candle body, it's real tiny, right? It creates a real small range. So we want to use the whole wick, top and bottom, right? If we have a nice full body candle, and I'm just going to find one real quick just to show you guys as an example. If we have a nice full body candle, right? Like this bad boy right here. We're just going to use this as an example, like a nice big body candle. We'll use the body. We don't worry about the wick, we'll use the body. But in the example that I'm showing you here, the whole candle is going to be used, right? Just because of how big the range it creates. So this high now becomes our ideal box entry, right? You call it a box entry, that we want to see if price is going to trade above it, below it, through it, reject it, refuse it, take it on a date, Lady in the Tramp spaghetti, whatever you want to call it, right? That we want to make sure that this specific candle gets traded through correctly, and we want to base it off of higher time frame order flow. Higher time frame order flow is key. Obviously, we're super duper bullish. So going into the block that we created, right? We are going to have a bullish outcome of what? Continuation of the trend. We want to see us break structure, drop lower, trade above, and then use that as support to go higher. So if we map out our block, we can see how we did exactly that. And if we map out the block even more, we can see how we're refusing to tap into this block, or we're using the break of structure, right? How we broke structure above the block. We're using this bullish pressure, or this fair value gap, excuse me, this fair value gap, this breakaway fair value gap. We're using this one still even into the next day. But the most important thing is, right, is just sitting and waiting, right? Being patient. So if we're anticipating higher price, and remember, we did our narrative, and our narrative was what? Our narrative was drop down to a certain level and attack previous day high. So if we draw this box intraday and our narrative remains the same, that we want to see this, then we have a good idea of how this box is going to be used, right? If we have a bearish narrative and we think that we're going to continue a downtrend, then we have an idea of how we want this box to be used, right? We want it to be used as an order block and drop down, right? That high of the session creates an order block, and that low of the session creates an order block, just waiting to get taken out and do one of the three things I'm going to explain to you, right? It wants to create the order block and trade into it and bounce, trade through it and use it as resistance, or trade above it, below it, and this is called a double purge. Trade above it, below it, and then come back up on top and use it to go even higher, right? Those are three different scenarios. We're gonna go over them in the PDF right now. But based off of our narrative, based off of our higher time frame order flow, is how we want to use this box. And the box, like I said, it really depends on your candle, because you want, on an uptrend, you want a up close candle, and on a downtrend, right? Like this is the downtrend. We're going to say this is where the session low was. We're going to use the body if it's a nice big range, or the whole candle if it's a little range, right? We're going to use that whole candle as our range, and then this becomes our measured area where we're going to anticipate price to do what? We're trading above it, and we're just going to use some context here. Our narrative is shorts to previous day low. So how would we use this box? how would we use it going into tomorrow? If we believe price is going to drop to previous day low, then we want to see us drop below the box and use the box as resistance to drop lower, right? And then we want to use our higher time frame order flow. So what happened? We took out the high, created another high, the highest point, and then we created a low here, and then we started downtrending, right? Well, our higher time frame order flow is bearish, our narrative is bearish, our target is below the box. So how would we use the box, right? We're going to use it as the order block getting broken through, turning into a breaker, and dropping lower. So those are the two easiest ways. It's used as a straight order block, right? We're going to use this as an example because this is a clean range. It's used as an order block, right? Here's your high, your candle here, and your candle here, right? Here's your high and your low. So now we're going to do what? We're going to trade into it. Again, we have a bearish narrative. We believe that we're going to continue lower price. So how would we use the block? We would use this block as resistance to go lower, right? If we have a bullish narrative, oh, I have previous day high, I want to use previous day high as my drawn liquidity, then how would we use the block? Up, right, retest, and go higher. So there's a couple examples that I went by. It's pretty straightforward right now. That what's going to change is how you view what's happening, and then of course your narrative and how you want to use the block, right? If you're bullish, and this is going to happen, right? Not every strategy is 100%, right? If you're bullish and the block ends up getting used as a reversal pattern, you know, it'll stop you out, but that's where you need to manage your trade and manage your risk. But the block, right, that we draw, that we anticipate price to do one of three things, is really going to help us stay disciplined and stay patient, because we don't care what price does internally. We're waiting for an external drive. We're waiting for our external range, right? Because the candle creates a range. We're waiting for our external range to get tapped into so we can see what happens with the order flow. Are we going to continue higher and use that to go higher, or are we going to reverse on it, right? Or the third one, right? We're going to trick everybody and we're going to do what's called a double purge, where we take out the low, take out the high, and take out the low. Or if we're bullish, right? Take out the high, take out the low, take out the high. So if we go to the PDF, let me open the PDF and just make sure you guys can see it. I gotta change my screen real quick, guys. So if we go to the PDF, right, what I've called this trading model is tempo break R, right? That's Spanish, tiempo breaker. So it's a timed breaker. Now, the breaker block, it gets used when we pass through the orb, right? But I just called it this specific trading model because when I was bringing it up, everybody called it 20 different things. So I took a little bit of what everybody was saying, and just turned it into this specific name. But like I explained, right, some of the things to look out for is the order block, the breaker block, or the reaper, and the reaper we'll go over at the end. And it's literally at the highs and the lows of the session, like I just showed you. So the highest probabilities, are the highest blocks, right, that you're going to create, are going to be on the 5-minute and the 1-hour time frame. So again, if you have a small bodied candle on the 5-minute, right, you can use the whole range. If you go to the 1-hour and the range remains around the same value, right, like let's say it's a 20 point range on the 5-minute and it's a 30-point range on the 1-hour, that's pretty good to use any one of those, because we're looking for price not to respect the PD array or the 50% like I've been showing. We're looking for price to reject the whole block or to take the whole block and go higher. And then it's important to remember that, you know, we anticipate price hitting a high of a session or a low of a session every day, but we don't know what time it is. So we don't know what time that we're actually going to hit that block, but we do know that the block is created at a session low or a session high. and that's why it's time based. It's it's more price based, right? Because your block is a price, and then once we traverse time, we hit that block, and then we look for the one of the three different ways to enter the block. And then, Peg, we've been talking a lot about the 50%. So close attention to the 50% helps you out a lot, but it's not really necessary, right? Because we want to either reject the block, which we can fully fill it, but we want to reject the block for the order block entry. We want to fill the block and come back down and tap it to for the breaker block entry. And then the Reaper, right? When we break through it, high and low and high and low, um, those are normally used for continuation or for ranging days, sorry. So your order block is a reversal entry where you believe price is going to reverse, or your drawn liquidity is going to be. Your breaker block is for when you want to take a continuation trade and you believe that the order flow is going to continue. We're going to take the high or the low and we're going to continue. And then you have your Reaper, and your Reaper is for when price is kind of channeling. You have your block that you created, and every time we trade away from that block, you can use that as a scalping model, or you can place your entry model at the low of the Reaper, because we just keep tapping the Reaper on the high or the low. And then the PDF just goes over some examples, which we did, right? So we'll get rid of the PDF. Um, but before we do, we'll go over the Reaper example, right? So like if we look at the Reaper example, we created our high, right? Our up close candle with the small body. So we used the whole range. We traded above the order block, making it look like it was a breaker, right? A breaker is just a failed order block. But when we came back into the range of Asia, we attempted one more breakout. But what did we do? We created that high. This is our high right here. This block is our high. London is our higher high, but then New York is what? Is our lower high. And remember, I explained to you guys that's your basic indication of a market structure shift. Is we create a high, a higher high, and a lower high. But what did we do on those highs? We broke the order block, faked out the breaker, and then tapped the order block again. So a Reaper is just an order block getting respected after being traded to. Hopefully that makes sense. And then for the um that was your bearish scenario, and for the bullish, it's the same, right? So like this one was tagged in relatively early, right? Price dropped, tapped it, and continued lower. But if we look at a different scenario, we can trade for a while, right? Like this is previous days order block where we traded below it and did what? We traded below it and we used it as a breaker, right? We use it as the breaker entry. If we were bearish when we came back to this order block, we would have anticipated what? That we traded under it and came back up and tapped it and dropped lower. But as we traded more and more and more throughout the next day, what did we do at the end of New York or the continuation of Asia, which was 2 days later from our block? We used it as a Reaper. Our order block that got traded through became a breaker, and then when we broke the breaker, it became a Reaper, and then that was our indication to go long, and then we continued longer. So hopefully that makes sense. It's my pirate model, roll breaker. So hopefully that makes sense. But the key is, right, let me change my screen again. But the key is mapping out your candle, the 5 minute or the 1 hour. So if we look at today as an example, right, we're going to look at today. Let me erase everything. We're going to look at today as an example and what we're anticipating, right? We're not going to look at previous price. We're just going to look at mapping out our blocks, right? We're going to look at mapping out our Asia, and then we'll look into doing our narratives. But we have our up close candle, right? We have a really good body, but it's still a small range. And then we have our down close, right? These are two order blocks, or supplies, or demands, or if you want to keep it as just a straight line on your chart, you have resistance, right? Resistance and support. But what I like to use them as is your order block, right? So when we trade with Asia, right, we're going to look for what? Our higher time frame order flow. What's our higher time frame order flow? Right? We're still bullish. We still have a bullish higher time frame. Now what are we doing on the lower time frame, right? On the lower time frame, we've created our high, right? Our higher high. And if this current price action trades up higher into Asia high and fails to take out this order block, right? We reject this order block. I'm going to anticipate that we're coming down to this order block where I'm going to wait for a trade. If I miss this trade, I'm just going to wait for this one. And based off of the order flow, right, we rejected the high, I'm going to anticipate one of two things, right? If I'm trading ICT, I'm going to anticipate that we take the low out, it's a false breakout, and we're going to continue higher. Based off of what? Based off of our higher time frame bullish order flow. Now, if I was bearish on this, how would I use the block? If I believe that we're going to attack previous day low, then I believe we're going to reject this up here. Then I'm going to wait for this order block to get tapped into, trade into it, and create a breaker and drop lower, attacking what? Again, attacking your next block where you what? Have your level, right? Because remember, our session lows are our levels. Let's say I want 2-day low. How would I use this block now? Same thing. I would anticipate a rejection, right? But I want to see this get traded through because I'm still bearish. So I want to see the next trade break through the block, tap into it, and drop lower, hitting all my bearish targets. And then the same thing goes, right, for bullish, our bullish scenario. Let's say we're bullish and we want to attack previous day high. We would wait for price to reach the high of Asia. And if we anticipate price to attack previous day high, we let it trade through the breaker and retest and come back up and take that high out. And then the Reaper, right? The Reaper would be if, we fail to take the low and fail to take the high and we just chop all day, right? We can still use Asia. And then when London gets created, this is just an example, London gets created here and here, we can use our newly created order blocks because this is the newly created liquidity or the liquidity that needs to get engineered around these levels, and we can use it the same. If we're expecting London to break out of Asia's high, we wait for it to be used as a breaker. If we anticipate that we're not going to take Asia, we want low a day, then when we trade and create the low of London, we tap the high of the order block, trade through it, and so on and so on. And then when New York happens, it's the same thing, right? When we create that New York high and low, what do we have? We have our New York order block. And if we anticipate price to break below the low, right, creating lower price, or a reversal, right? If we anticipate New York to be a reversal, then we can use it as an order block and then use London, right, as our target and to go higher, and then Asia to go higher. Hopefully that makes sense, guys. Do you guys have any questions? You guys are crazy. You never heard ARRR? Break ARRR. So the candle color, Guam, it does matter, right? When we're coming from an uptrend and we're looking for our high to be created, we want this candle to be an up close, right? Before we start trickling down. This we want to be an up close. And when we have our low, right, and we're coming down to our low, we want this to be a down close. So my up closes are light blue and my down closes are black, right? So at the high, I want to measure out my blue candle, right? This is my blue candle that I measured. And then at my low, I want to measure out my black candle. This is just, for me guys, this is just an easier way to visualize and compartmentalize the 3 different ways to trade the blocks, it takes away the ICT from it. It takes away the supply and demand, and it takes away the support and resistance. But all three of them are used exactly the same, right? If we have this mapped as a supply, which essentially that's what it is, or this as a demand or an order block, right? An order block, according to ICT, is a failed breaker. A supply that we break out of turns into what? It turns into, you guys call it a turncoat, right? It turns into a turncoat. So you can call it a turncoat entry, or you can call it the breaker entry, or you can call it the supply turning to demand, or the support turning to resistance, right? They're all three essentially the same, but the one thing that's universal in the model is you map out your candle and how you anticipate, and sorry, the one thing that's the same is you how you map out your candle, but what is different is building your narrative and how you believe the market is going to react to that candle. Just reading the chat. It's super to map out what indicator you use. It's super tank or super easy. Yeah, it's easy with the indicator because it maps out the high for you, right? So all you got to do is it doesn't matter what day you have, right? You know, we can go to any day and you can see the high is here. So if we zoom in, right, we can see that the high is what? An up close, right? So when we map out our up close, and let's say we anticipated bearish structure, or even if we anticipated a reversal here, we would have got stopped out of our trade because we would have wanted it to reverse. But remember our continuation, right? If we wanted a continuation here of the high, what do we need to happen first in order for it to continue? We need to take out the high. We never did. Look how close New York got. We never took out Asia and London. We got super close, but we never took it out. What are we looking for if we wanted to attack the highs? We need price to trade above the block and retest it. The safest entry is going to be the retest, right? Your aggressive entry is going to be, and I don't recommend this, is as soon as it breaks out, you just mark it in, right? I don't recommend that. We always want to get in on the retest because the retest is the structure of the market continuing, and then we can put our stop loss at a reasonable area because if we anticipate the correct way the block is going to be used, when we have our stop loss, we'll trade away from it, right? But if we look at how this block was used, even if we anticipated price to be bullish here, this was our indicator that price is not bullish. And when we traded away from it, what are we targeting, right? We're targeting the lower block, right? So remember, this is where we failed, but this is the lower block. So if we erase all this and we use our rectangle for this down close here, right? When we broke through, right, and we came down and we broke through here, this block, because we were bullish, we wanted to see this get broken out. We would have never traded this. We would have waited for this to be broken out of, right? We would have waited for Asia high to be taken. Well, look what happened when we rejected. We rejected. We traded below the order block completely because we did it here and here. And when we came back up to it, what did we do? We respected it really well and we dropped. And even then, when we came back up to it again, we respected it really well again. Right? So anticipating how you believe the block is going to be used, which is only one of three ways, and identifying the higher time frame order flow is going to help you. But the one thing that's going to remain universal in any one of the three trades is when you have your block, if you're bullish, you need to fill the block and bounce. If you're bearish on that block, right, from an uptrend, you need to not fill and reject. If you believe it's a continuation day, then you need to do what? You need to be wary of the block because we will trade in it and go either way, right? We'll trade below it or above it depending on if you are bullish or if you are bearish. but the blocks all remain the same. Like if any of you guys, back tested and you guys look at how the highs and the lows are even on range days like this, that block or that high a day, low a day, high a session, low a session is going to remain important throughout the whole day and even into next days, kind of like untested um, new day opening gaps or like untested RTH gaps, right? It's kind of like the same concept. You don't have to leave it mapped out on your chart. I never do, but the way the block sits, right? When this block sits here, we'll just use this as an example because there's no price next to it, right? We can tell this is a big up close candle here, and then we'll make it go all the way to the right, and we'll zoom out and we can see how price reacted to it, right? When we came and we rejected it, right? We traded above it like a breaker, right? And then this would have been deleted here. I would have stopped using it here, but we can even see how if we run this specific high, and I don't want you to make blocks on every single high or low. I'm just using this as an example. If you look at this specific block that goes all the way across, right? When we traded back down into it, right? We tapped into it to go even higher. Because that specific high, right? You can technically use it as 3 trades every single time. It doesn't matter how many days pass, that block is going to be used the exact same way. If we tap into the block the next day, that's fine. If we trade away from it, right? We trade away from the block that's created. When we come back, we can still anticipate the same thing. We can anticipate what? Bullish order flow. So what do we want to see? We want to see trading above. We would have got stopped out here, but we were still bullish. And if we would have attempted again, right? Look, we came, we bounced, right? We could have, and this goes into the next day though. We don't swing trade, but we would have got stopped out here, and then this would have been perfect, like a good entry to go long, right? We bounced, and then as we traded underneath it, like I said, once we bounced off of it here, I would have deleted it. But even so, when we came back above it, right, we use it again and again and again and again. But it can get really confusing if you leave all the old blocks on there. That's why I only use the current session and then whatever is outside of it, right? High a day or low a day. Emphasize R. You can't roll your R's, bro. Arriba. You guys are crazy. Do the R thing you made, bruh, bruh, bruh. You guys are crazy. When the video's posted, yeah, I'll let you know, GG. Sobre de tortuga. Tortug. You guys are crazy. All the people who took buy style from the breakout got swept, and then it goes down. I'm just reading the chat, guys. We're good in their time to the turtle traders. I wouldn't use it. Super. Dick, you know what I've noticed also on a continuation breakout, price breaks out and comes back to retest on a whole leg or a pivot. On a reversal, price will reject and bounce, but usually does not come back to that level. Yeah, when you have a continuation trade, right? When we're trading off of continuations, and I've said this a couple times, when we break structure, right? This is our high. When we come back to break structure, a real easy way for you to identify that the trend is strong is when we come back down, we do not tap into or even touch that high. So like we have our high here, right? This is where we created our high. And when we come above it and we drop and we go higher, we leave a gap in between the specific high that we break out of, right? That's a strong, strong indicator that we're going to continue the trend. When you have a reversal, right, when we create that break of structure and we drop lower, we create the high and then we break a structure and then we drop lower. When we come back, we normally, and again, this is an indicator, we will not tap into that a high, that previous high, right? We won't tap into it. We'll trade underneath it and go lower, and that's an indicator of your reversal. So how the level gets breached is an indicator, right? If we create the high, break out, right, and then we come back and we break out again, we still need to watch this high. The high that was created here, we need to watch, because if we break this low, then it becomes a downtrend. But if we drop, right, and we hit that level and go higher, then we're creating a higher time frame uptrend, and the lower time frame is doing what? It's inducing everyone to think we're shifting the market or shifting the order flow, but actually what we're doing is we're just failing to take the low or the equal low that it leaves behind, and we are actually just going higher. Will you share your indicator once more? Yeah, I'll share the indicator again. 9:30 tapped the 5 minute. Uh, Took Asia low this morning. Yeah, the block that we touched on today, I was looking at that. So I didn't take a trade off of it. I have it up if you guys watch the video. Actually, I'll just go to the chart. So if we go to the chart, this is what Guam's talking about. Right, the low that we created here, this one here, this is a down close candle, right? We tapped into it. Let me get rid of the extended line. But we once we created that block, right? This one got traded underneath. But once we created that London, that's a whole nother block. So technically, right, we have two blocks. We have this bad boy here and this one at the bottom. So we kind of have like a double stacker, right? Like a double stack. What is it called? A Taco Bell? Double decker taco. We got double decker taco right here, bro. So we got Asia low and London low, right? You have this block and this block. Well, look at what price did. Price was having a hard time trading underneath the Asia block, but once the Asia block got ran through, we still had to trade through the London block. And then look what price did. So that's what Guam was talking about. Tank is responding to Dick. The reversal tends to be sharp right. Trizzy posted the indicator. You want to go over everything again, Diamond Hands? I have the PDF. I sent you the PDF. You said you were going to review it and you never did. You lied to me. You lied to me, Diamond. I trusted you. I trusted you and you lied to me. Not surprised at all. Dang, Freedom. You guys are crazy. I know, bro. There's so much stuff going on. But what I'm showing you guys about how this model works, it's good because with TradingView, right? With TradingView, you can add an alert. So like if your block is this price here, this price leg, you can drop an alert, right? You can add an alert and you can have it SMS, you can have it text you, right? You can have it text you or ping you on your phone that you're crossing 22075, which is what? Which is a possible trade. So you can go about your day and do whatever it is you need to do. And if you create your narrative the night before, like we've been doing, right? We create our narrative and we anticipate price to take previous day high and go higher. When we come into this block, right? Once when we traverse time and we actually cross that level and we get the ping, right? We get the indication that hey, we're crossing our level and we open our chart, we already have a very good idea of what's going to happen because we painted the picture before. And as we see it happening, we know what? We know to wait for price to break through our block, tap our block, trade away, and enter and take a really good trade. A scalp or a trade, maybe you take a couple minis and hold it, right? You got a wide stop loss. Maybe you have a tight stop loss because you're busy, you can't really look at your phone. Whatever it is, this model allows you to anticipate the one of three ways that price is going to react to that block. And if you're busy, right? And if you're not, then you can just sit and you can wait and you can watch price get to your specific area, and then you can anticipate what's going to happen. So Guam, the photo that you're posting, Guam, if you look, right, we did create that the block that you have is good if we traded away from it, but we traded above it. So if you look to the right of the block that you created, there's another up close candle that's higher than the block. That's the block you're looking at. I'm just looking at the chat, guys. Yeah, because that's the highest body. Because remember, according to ICT, right, the bodies is what does is what tells you the story, and the wick is what does the damage. So when we're coming up and we want to respect, right? When we're coming up and we want to respect that block, we don't want to see price close anymore above that highest close in price. We want to see price reject the candle body. Rejecting the wick is what a lot of people look for, right? Um, but we want to see it reject the body. The rejection of the body, it was what helps you identify that that price is not going to continue, right? When we reject the body of the candle, the wick, right? Like the wick is cool, but really what we reject is the body of it, right? Like you see the wicks, what are the wicks rejecting? They're rejecting the body. But once we get a strong close above the body, right, then we can remain bullish. The same thing goes for if you map out like support and resistance, right? Like you have some equal bodies here. Like what's really hard to get above, right? It's really hard to get above this body here that we closed under. But then when we displaced and we dropped lower, what are we failing to close under, right? If we use the bodies again, we're failing to close under the body of these two, the displacement. So it made us bounce up. The same thing goes for here, right? You have your high up close here, the body, right? Here we'll put it a little closer so you can see. But you have the high of the body right here, right? Still not there. This one closed slightly above it, right? But like it's having a hard time closing where? Above the body. And then we traded away from it. That body is important, right? Trading above the body, right? Because the wick's going to do the damage, this high up close. And if we have a hard time staying closed above the body, right, then we can see a sharp reaction. If we displace above the body, then this becomes what? A point of resistance. Guys are getting all the sauce, bro. Reaper block is a failed turncoat. Yeah. Yeah, Tank. I've always had this little Charmander guy skateboarding. He's been like that for a long time. So if I'm ever like I explained, I'm gonna